Going to keep it real simple this week. Buy the rumour, sell the fact. It's a common phrase that everyone hears in trading. I was going to have a little look at what exactly the reality of this is, because like so many common phrases in trading, they actually aren't necessarily precisely what the simplicity of the phrase is. You know, the easy assumption is you hear a rumor of something, you buy, and then you hear the truth and you sell, and it's that simple that you go click, and that's it. Realistically, it doesn't follow quite that theme. More, and the big thing that you've got to be thinking about is, why are you buying the rumor? What exactly are you buying? And that's the important thing to work out with this. So that, and I've done this a few weeks ago, we did something on oil as well, in talking about the whole concept of understanding the progression of news and what happens as a piece of news comes to market, as it gains traction, and as it then starts to fade away. What are the implications of this? How does it trade? I'm sure some of you will remember the bell curves that I had drawn on that. But what you really got to be thinking about with the buy the rumor and sell the fact concepts, and it could be sell the rumor, buy the fact. It doesn't have to be, you know, one way round or another. You've got to be thinking about the reason you're buying is the possibility of what could happen. You're not buying because this has happened. You're buying because there's a possibility that it might happen, and also there's a possibility that it might happen imminently. And that's another important aspect of this concept. That it has to happen soon, otherwise the rumor just fades and gets diluted by other stories that are out there. And that's a really important thing to bear in mind. So the most recent rumor, and you call it a rumor, this was not a rumor, but the concept is the same. Pelosi going to Taiwan is the story, and we know that was happening. It's not like it was something that you didn't know. We knew that she was going. Well, once it was announced she was going, we knew. The rumor side is essentially interchangeable with possibility of uncertainty. Because what this creates is all sorts of different scenarios about what could happen with Pelosi going to Taiwan. What's the reaction of the Chinese? Is there a military risk? Is this a very significant risk? How does this play out? And essentially what this does is the rumor of Pelosi going to Taiwan, or more to the point, the uncertainty created by Pelosi going to Taiwan, increase the possibility of some degree of war between the two nations, China and the US, or the possibility of sanctions. Now, in reality of what happens in scenarios like this, and the easy example that we've had recently was the Ukraine invasion, or the Ukraine invasion by Russia. This was being rumoured, and the possibility was becoming more and more realistic. This is what took oil from the beginning of the year at about $75 up to around about the high 80s. What you then get is, on the story of the invasion, a quick move up. And that is it. Because by this point, everybody has already bought the rumour. We already think it's possible. And so then the confirmation of the rumour is the point where you sell the fact. It's not to say it will immediately drop. And the invasion of Ukraine does create a spike in oil prices, which then reverse very, very quickly back where they were. And essentially what this is everybody who's played for it gets the pop up and they sell the facts. They take their profits. That's the way you've got to think about it. What we then have is a secondary development to the story. And what happens here is new developments. This is the more and more and more talk about the concept of, or the possibility of nuclear warfare, and the escalation of this into other areas, possibly going into Europe, NATO countries. That was a possibility. Over time, the other aspect of this sell the fact is that as the story becomes more accepted, more well understood, it gets diluted. And so part of the fall in oil is not the sense that the war in Ukraine has stopped or anything has really changed there. It's just that it has become slightly more clear what exactly it is, that this does not seem to be an escalation into Europe or nuclear warfare. It is Russia attempting to potentially take over Ukraine. So when you look at it like that, this is the possibility of a much wider sort of World War III scenario, and then the reversal on the basis that this is no longer World War III, it is an invasion. And over time, then the movements get further diluted because it becomes more and more clear that, more and more clear what is going on. So the uncertainty dissipates. So a lot of it is buy the uncertainty, sell the dilution in some situations, as opposed to, or rather than sell the dilution, expect volatility to drop as the uncertainty gets diluted into the wider market. If we go and have a look at the recent moves, this is in T-note and in gold. Now, don't get me wrong, we weren't hearing about Pelosi going to Taiwan all the way over here. It was only a few days back that we started to hear about this. And that's then continued this movement on. So, what you do have here is an element of buying the rumour on the possibility of war getting priced in. And the reason I've used gold and T-note rather than equities is because this is buy and then sell the fact. The other thing to bear in mind as well is what needs to happen for any further scenario to build out. Essentially, the pricing in, people have jumped to the very high risk of a war, when realistically, we might be more like pricing in a bit of uncertainty around whether this generates slightly more tension between US and China, or possibly more sanctions between the two countries as well. Neither are great, but neither of them are anywhere near as extreme as what initially is priced on the possibility of war, or certainly what is at least being talked up. The other aspect of this, like I said at the beginning, is how imminent is the event? Once Pelosi lands in Taiwan, absent of any discussions, and whatever is said and whether that escalates or changes the situation at all, absence of any of that, the immediate risk, which to be fair was realistic and many people were watching this, her plane being shot down was the sort of most extreme risk, that has clearly gone. So whilst that was probably not a major aspect of the pricing, that risk has disappeared. Now that doesn't explain this drop or this drop necessarily, and part of that also is the aspect that the longer a story goes on, the more diluted it can become, and comments from Fed members can take precedent here, and they take over in importance, and that's part of the reason for the drop. So one, you've got a lot of people who are waiting for their profit take on the rumour and then selling the fact of Pelosi landing unscathed and potentially these talks not escalating into more tensions. But you've also then got a lot of people long with the possibility that anything negative for gold or for bonds is going to be a chance to sell, because quite simply, you've got a load of people positioned here looking for one thing. They then get the much more pertinent and much more genuine risk that the Fed raises rates faster than expected. That's less of a rumor and facts type idea. This is a vague possibility of varying degrees dependent upon who you are and what media sources you believe, whereas the talk of possibly higher rates is very clearly a direct risk with a very clear consequence for bond markets, for gold. So that's the difference in terms of, the rumor is the kind of uncertainty of varying magnitude that can then be diluted. Whereas the much more sort of factual story, it's very clear what the implications of this are, and it's very clear what the reaction of this is. So I think part of this move is not the severity of the comment, but partly to do with the positioning into the comment on the uncertainty around other aspects.